Ladies and gentlemen, I wanted to give an update on the current tariff situation with Donald Trump changing his tune a little bit when it comes to China. There's been some reports out that now the tariffs with China are going to be lowered to 55, 65%, people saying, but then the White House said, no, they're remaining as is until a deal gets worked out with the Chinese. And you also have people within the Trump administration saying it might take 2 or 3 years to work out the full trade deal with China, but we would imagine there would be things that get put in place earlier than that so we could at least really get the ball rolling when it comes to what Trump wants to accomplish with these tariffs. I mean, there's going to be tariffs that remain on China. That's just the reality of trying to domestically produce things. But there will be tariffs that, of course, will be removed, considering right now it's 145% tariff rate, which is pretty extreme. So you've got Donald Trump confirming that his tariff plan is going to substantially lower income taxes once it's finished. He also confirms he's in active talks with China and essentially the entire world. I have no idea if it'll work, but it's well, I mean, him lowering the income taxes is going to be challenging. I would imagine he's probably talking about keeping some type of tariff on China, which will generate revenue for us. What is it going to generate? I'm not sure. Is it really going to be substantial enough to, I get maybe not eliminate, but he's saying lower income taxes in the United States. I don't know. There's also an interesting thing with Trump that's come out, and this is the second time I've heard this in the past month in terms of him possibly raising taxes on rich people. I'm not kidding. There have been talks about possibly doing it. A lot of Republicans I know want a flat tax where it's 5%, 7% for everyone, no matter how much you make. I understand that we're in a capitalist society. So there's ways you can kind of manipulate the tax situation considering how extreme the wealthy are in this country. And that's just a byproduct of capitalism. It's very easy to make money once you already have money. And so there is the idea of, well, if you just bump this up, I mean, the problem is you do have rich people in some instances, depending on the state income taxes, the rate's like 11, 12% in California. The rate's extremely high in many other liberal states. You're looking at taxes of around 54, 55% of your income. So over half. So you want to raise that even higher? I think it would be wise for Trump to look at the offshore accounts that are used by giant corporations. That might be for the best in terms of trying to be able to punish those corporations for skirting taxes and hurting overall revenue within the United States. But it's something interesting to look at. We also do have this from Axios. Trump softens tariff tone amid empty shelves warning and a market slump. Now, this can be interpreted a number of different ways. People are going to say, well, Axios is liberal, so this is painted as a negative, like Trump didn't know what he was doing with the tariff originally against China. I'm just trying to add context to it. Let's just read this. The article says that Trump's Treasury Secretary and then his press secretary and then Trump himself all indicated that talks with China were imminent, starting on a good foot, and it would result in a deal with much lower tariffs than the current 145%. Well, that makes sense. Yes. Obviously, when we negotiate a trade deal with China, the tariffs will be lowered. The key here is that they're not lowered before the negotiations happen. Because we know there's been is the electronic tariff back down to 25%, which was the base, or I think 20% is the baseline tariffs on China that was originally put in by Trump. But yeah, I mean, the tariffs on China will, because of negotiations, come down. How are the Chinese going to negotiate with us and get a relative fair deal with us if we don't bring the 145% tariff down? But I would imagine there's still going to be a tariff on China that's pretty substantial. Trump then told reporters in the Oval Office that he had no intention of firing Powell, even though his top economic advisor said last week the White House was studying the details of doing exactly that. Well, I don't think Trump has the authority to fire him. It would have to go to Congress. But if Trump really pressures it, I know Trump said he could get rid of Powell if he wanted to. It's a little bit hazy in terms of him actually having the ability to do that. But if he did, with executive authority, put his foot down and say he wants Powell out, that's going to be a major thing. That's going to carry a lot of weight in terms of it actually happening. But it's not like he can just say, okay, you're gone. Now, maybe Powell would just decide to step down. But the issue with Powell was he's obviously treating Trump. And you could say, well, there's a lot of uncertainty within the markets. We don't know what Trump's going to be doing in terms of these tariffs, the one he's keeping on, the ones he's taking off. Ideally, what we would see is we would see these negotiations happen. You would get a bunch of new trade deals. You would start negotiations with China, and that would give the Fed the basis and really the confidence to be able to bring the rates down. Because you look at the indicators, this is a very attractive situation in terms of the indicators we're seeing to bring the interest rates down, with the inflation and the trueflation plummeting, with the energy sector dropping as well since Trump came into office. And also the overperformance in terms of total jobs added to the market that was reported in the month of March. And by the way, we'll have to see what the GDP is in 2 days as well. The markets got what they wanted and they rallied hard. So Trump came out today, or this would have been Tuesday. So yesterday, Trump came out yesterday after a bad Monday and said, he calmed people down. He said, listen, there's going to be trade deals. We will eventually bring the tariffs down on China, which I thought everyone already knew. How are we going to negotiate with the Chinese and still have tariffs at 145%? That's going to be one of the things that's going to have to be brought down to a degree. But if there still are significant tariffs on China, especially on select sectors that we know we can produce domestically for relatively the same prices, then this is a strategical thing too. You also have Scott Bessent has been gaining more influence in recent weeks, getting in Trump's ear to the point of rushing the Oval Office when other advisors aren't around to get him to ease off for the sake of the market. So Bessent apparently has significant pull within the economic side of Trump's administration, it looks like. For the first time since he entered political life, polls show most voters disapprove of Trump's handling of the economy. Inflation, which he claims is non-existent, is still a hot issue. See, that just doesn't make any sense. I mean, to me, this is a lot of like very, very short-term view. Yes, the stock market is not. I mean, there was recent approval rating, and it was the boomers, the only ones that had a negative opinion of Donald Trump. Now, that's just one approval poll, but it was interesting to see with the 401ks and just boomers in general being more liberal. But the inflation stuff is insane. If anything, if your number one concern is inflation, now maybe people say, well, we haven't felt it yet, the relief of the inflation, but it's because there's normally a lag period. But inflation has been cut in half. Like, you'd think inflation would be the one thing within the economy that people would like, because there is a result, and it is in part because of these tariffs, because of the uncertainty within the market's tanking. It's a byproduct. It reflects in lower inflation. So it's like, but I understand people say they haven't felt the prices come down yet. But it's just crazy to see like inflation minus 20 in terms of approval. Inflation has got cut in half since Trump has come into the White House. But you can see recession isn't inevitable, but it looks a lot more likely now than it did even a couple of months ago. But how do you what is your definition of a recession? Because it looks like we're probably going to get a positive Q1 growth rate. So you think Q2 and Q3 are going to be negative? Well, that's a lot of projection. So we don't know that for sure. And like the whole idea of a recession, it's a big bet. So it's like, if we get growth rate of minus 0.1% and then minus 0.2%, that's a recession. See, that's what Biden talked about. But Biden's situation was a lot worse. And to be fair to Biden, it was a little bit different rather than it being a recession, because the growth rates were negligible. But we're talking about a much more juiced up economy in terms of the money printing that was going on, and we still had a recession under Biden. That was, I believe, in 2020, late in 2022, and that was with that was with the stock market performing a lot better at that time, because there was a bunch of money being influxed into the market. Now we've got a worse stock market, so you would understand. And also, by the way, that was with a ton of inflation. The inflation was a lot worse than it is now. The idea is, and I think this is how I see it playing out, I can kind of see it clearly with Trump. There's going to be a lot of trade deals that get done. We know this. We understand it. Is that a trade deal with every country going to get done? I don't know, but I think a lot of it's going to get done. That's going to be good for the markets. You're going to get a deal with China at some point. Those tariffs are going to be lowered. They're not going to be 145%. Trump has already lowered tariffs on certain things, certain Chinese products. This is just the reality of it. When you negotiate, they're going to be brought down. We can still get the rate cuts, maybe not in May. If we don't get them in May, Trump's going to be real angry. And there might be a big blow up on Powell if that happens. But I mean, what is it? May 9th? Yeah, May 9th, it's going to be tough with it being, it's the 23rd right now. So it's about 2 weeks, 2.5 weeks away. Because we don't, how many deals get done by then? But I would say the cuts have to happen in June. As long as we get similar inflation numbers, which we're going to because of this market performance. It would be surprising if inflation ticked up again. But even if inflation went up a little bit, they cut rates in September with much higher, not much higher, but higher inflation than this. And that was 1,000% because of the election. Cutting the rates in September, stimulate economic growth for a short-term benefit. September, October, November 3rd or November 5th. No, when is the election? November 5th? I mean, so that's the problem with Powell when you play politics. And I understand. I get you're an independent body. You don't want this, whatever Trump wants, that's what happens because that's how inflation is created to a degree if he immediately destroys all the rates. But come on. Really, the rates should be cut in May. They should be. Now, as long as they get cut by June and then we get 2 or 3 cuts, preferably within the next few meetings after that, that would be ideal. But like the way it plays out, if all of the negotiations happen, all right, the Fed's got more confidence, the inflation's still low, then they cut it. And now we have the baseline economic growth, the same thing that we had in 2018 with lower inflation, lower interest rates. And then the refinancing can happen. And that's really where Trump can start explaining the method to the madness in terms of the tariffs and everything like that. Because there's a bigger picture plan, not even just including the tariffs, but even you look at the tariffs, you could say we can explain this away because we are renegotiating with all these countries and we will be forcing these countries when we renegotiate with them to listen, if you're going to get imports from China and you're going to export them to the United States, they will be tariffed. And so that's a big key when it comes to the renegotiations. And Trump knows it's very important. And so the renegotiations with these countries will happen. I think it's a good time to get into the market right now because there is a lot of unknowns. But these are all unknowns that are going to be solved. We know the answers to this. The trade renegotiations. The renegotiation with China. China says they're ready to play ball. The United States is ready to play ball. The Chinese are not going to give in. They're not going to capitulate immediately. This is just the reality. This is how they are. But it doesn't really matter. All we want is more domestic production and more self-sufficiency. And to not have China, I mean, they're always going to be on a different playing field than we are because of their labor laws and just the mass production, the population differences. But we're going to be able to create and foster an environment in the United States to where we're creating things domestically. We're going to build more manufacturing. We're going to introduce AI into labor. I know people don't like that, but with certain things, it has to be done. That's going to allow us to build independent of China. And then you take a look at something like rare earths, which is extremely important. Relying on China for the refinement of them, probably not the best thing. And we've heard that there's rumors that Trump is, maybe it's around $15 billion invested into starting a refinement process in the United States, depending on if there's approval because of environmental concerns. But these are all things that are, this is positive stuff. It really is. I know people are dealing with the market. It's not doing well right now. We get it. But you just do the big picture. I mean, see right here, big picture. The big picture, Trump improves U.S. global standing by increasing self-sufficiency and fostering better trade deals. That's really what it should say. But instead it's, he's got this terrible, approval rate. Well, yeah, this is all very short-term stuff. I understand he's going to have a bad approval rating on the economy. Okay, the stock market's way down. That's the thing that people have to understand. They're like, well, the stock market doesn't matter. Absolutely it matters. That's how normies judge the economy, in a sense. Now, it's also prices, everyday prices. I understand it. Gas. But, I mean, gas is relative down. I know some people are saying they're not feeling it. They think it's the same price. But gas as a whole is down. Crude oil is like $61, $63. It was $80 when Trump entered. So it's down as well. So I think it's just being balanced and being stoic when we deal with all of this, all these things floating around us about Trump is terrible with the economy. What's going on? The market's tanked again on Monday. Nobody trusts him. And now he's taking the tariffs off the countries. He's putting them back on. There's going to be these things that happen. And some people, they don't like that Trump took the tariffs off. when you get a death indicator, you kind of have to reassess it. People say he should have just left them on no matter what. The problem with the tariffs are when he did that Liberation Day, those were not reciprocal tariffs. Now, he said they were reciprocal. They just point blank period were not reciprocal. They were based on trade deficits. And so the problem with that is we're going to have deficits with especially smaller countries. And we've got a much bigger, more wealthy consumer base. So that's the issue. But I agree with the premise and the idea of it. And even if it did tank the market for a day or for 2 days, whatever it was, I mean, the markets did shoot back up to a degree. So how much really was lost? But the point of it is we're still going to see at least some fruits of this disruption, like the trueflation going down, which will cause the rates to be cut, we hope. That's why Trump is angry at Powell, because this is what should happen. We've sacrificed a lot in terms of, and the other thing is people have to understand this. Well, did Trump really have to sacrifice the economy and all this? I mean, we're at like the same levels the Dow is, the NASDAQ, S&P. I think as we were like a year ago or September of 2024. I mean, it's just all this fear-mongering, all this stuff. And I'll tell you guys right now, Trump wants low inflation and low interest rates. And to achieve that quickly, you have to disrupt the economy. If you don't do this, and we do this thing to where we try and do these limited strategic tariffs, and it's like this, sustainable growth, and it has to go up no matter what, and I'll be liked, we're going to be tussling with Powell. It's going to be Q3 of 2026. The rates will still be the same. And Trump is forcing it. That's why he's so angry Powell isn't doing anything. And the other thing is just Powell is repeating these just liberal talking points like they're inflationary and all this. Well, why don't you talk about where the inflation is right now since Trump came into office? Do you understand that because of these tariffs and the uncertainty in the market, it's driven inflation down? I'm not saying everything is good about it, the fact that the economy's gone down. It's a byproduct, though. So why are you talking about the potential inflationary result of tariffs that we don't even know if they're going to stay on? By the way, they're not, because there's going to be trade deals negotiated. And why wouldn't you be talking about, well, yes, we're looking at potentially cutting interest rates because we see that Trump, as a byproduct of this economic turmoil, has brought inflation down to really where it was in like 2019 for the first time. And it's like first time and lowest it's been in 5 years. And so we're going to be looking, but there's none of that. It's just this liberal, like, it might be inflationary. Well, okay, why don't you explain to me what tariffs Donald Trump has on right now are going to remain in place on these countries a year from now? You can't explain any of it to me. So see how it's all this speculation. They don't even know, because nobody knows. Most of these tariffs are going to be taken off. So it's like even their arguments are based on fallacy. A lot of the tariffs will be removed off these countries. And then they're like, well, Trump is backing away from his 145% tariff. And I was like, wow, that's disappointing. But then they're like, oh, when we do a deal, the tariffs are going to be a lot lower. Well, what is China going to accept a deal where we still tariff them at 145%? Obviously, it's going to be lower. I mean, my goodness. But there's still going to be a tariff on China. Trump wants domestic production. You have got to commit to tariffs at some point on China. With a trade deal, there's still going to be tariffs on China at high percentages in certain sectors, because he's committed, I believe, to domestic production and not having an over-reliance on China. So that's really what we need to be talking about here. But either way, guys, make sure you like the video down below. That's going to do it for this one. Also, follow me on X. Link to that's always in the description.